All right, welcome back to the channel. We've got our weekly stock market update. Should be another quick one this week. We're going to look at the charts, we'll look at the heat map, and then we'll look at some of the numbers that came out this week and some of the economic data. Right now we're looking at a weekly chart of the S&P 500. We did hit another all-time high this week, and we're staying above our red line that we've had here for a long time. But we do have some selling at the end of the week, and then we also have the volatility spiked today. I was pretty busy today. I didn't get to watch the markets too much, but we did see the volatility start to creep up here this morning and this afternoon. So I'm not too sure what the news is there. We did have Nvidia with a little bit of red. But as far as the other indices, the NASDAQ was also green this week, but again, selling off the last day and a half. We had a lot of green yesterday morning, and I don't know if it was Fed Powell gave a speech, and that kind of sent the market down. Who knows? We have had such a very nice recovery here since the beginning of September. Again, these months are looking kind of similar. We had August, we started off really red, and then the rest of it ripped up. The beginning of September started off red. The rest of September we've ripped up. Maybe we repeat again in October. We start off with a lot of red and then we rip up at the end. I don't know. But I'm seeing a pattern. I'm seeing a trend. We'll wait and see if that is going to be a similar thing for next month. Gold continuing to hit all-time highs. We did have oil. Big sell-off the last couple days. Interesting. I didn't see this, but we are back down in the 68 range, and Bitcoin is moving quite a bit. So we are on the verge of breaking out or breaking down. Who knows? We'll see. Once we get above 68, that's going to be a big number, and then again, 74 is the big all-time high if we can get there. But definitely we've had moves like this before to get rejected. Another move rejected, another move rejected. So we will wait and see what develops here. Individual names. Nvidia had a good week, but a terrible end of the week. Let's see here. Tesla is on a rip, doing really well. They do have their AI day coming up soon. I believe that's October 10th. Again, we've been here before a large sell-off. I did have a covered call that I closed out for just a quick profit the other day, yesterday when it was red. So next week I will take the weekend and decide how much I want to hedge going into this meeting, because what we tend to see is Tesla runs up going into an event, and then there's a sell the news. A run up into an event and then sell the news. I think we're going to probably see something like that as well. But again, longer term, I really still like the story here. We are going to see interest rates come down. And Tesla's been sideways since 2020 in a sense. Yeah, in December 2020, we were at 268. We did have a blow off top and a dumpster fire bottom. But really, we've been chopping sideways, which makes sense because it wasn't that long ago that Tesla was $12. So it made a huge run up. It needs to consolidate sideways for a few years before breaking out to the next leg. I assume that's going to be within the next year or so that we break out to the next level up. So will that be this AI day, or will that be sometime in 2025, early 2026? I don't know. But the premiums are very juicy on Tesla. To me, it would make sense to sell a call somewhere over the $300 range just to collect some premium, just in case we get a sell-off. And I wouldn't mind selling a little bit more Tesla at 300, but I definitely don't want to get rid of my entire position. So I'm going to take the weekend to determine how much I want to hedge there. I did think about selling some calls on Nvidia as well, which would have been a great idea because we look like we may have a little bit of a sell-off coming our way. And it's also for Amazon. So I'm eyeing out what some covered calls would look like, what strike prices. The only options chain that has a lot of volatility right now is Tesla, but since we did have the VIX pop up a little bit today, 10% rise in the VIX, there could be some good premiums coming for these other stocks to sell some calls. And if we get some red, I may look to sell a put in Nvidia as well, because I do want to gather some more shares. So that's what I'm doing with my portfolio. And as far as individual names, that's all that I really got for you. Let's go ahead and take a look at the heat map. A little bit more money coming back into the semiconductors. We're seeing a lot of green here. Whoa. Why would I get an ad for a dinosaur? But anyways, we're seeing a lot of green back here in the semis and the software as well. I do think this week there's been a little bit of optimism coming back into the AI trade. I myself have been using these tools a lot more. I recommend checking out Perplexity. Obviously, everyone knows about ChatGPT. The next one on my list to check out is going to be Claude. That's from Anthropic. That's owned partially by Amazon. So I'll be checking out their model. And I think that's why we're seeing a bid in software, obviously the semis. But I think these software companies are figuring out how to embed AI into their products to make them much more efficient and to regain interest to people to come back and sign up. We did see healthcare sell off. And then again, the big winner of the week is going to be Tesla, up 9%. Again, running into their AI day, running up into the event. As far as economic data this week, there wasn't a whole lot besides we did get the GDP numbers. They came in line at a 3% GDP growth quarter over quarter. And then we did have Jerome Powell speak. I didn't watch the speech. It was pre-recorded. I was doing stuff in the market, so I didn't pay attention to what he had to say. Because it was pre-recorded, I figured there wasn't anything earth-shattering in there. And I didn't see any headlines come across. So there's really not a whole lot he's going to have to say. They just cut rates. He just gave his speech. But let's go ahead and take a peek for next week. Next week, we've got another speech by Jerome Powell, Monday morning. We've got some jobs numbers, manufacturing numbers, and it is non-farm payroll week and unemployment claims on Thursday as every week. But the big day is going to be Friday with the unemployment rate and the non-farm payroll. So typically these weeks, non-farm payroll week, we see a lot of choppiness, volatility in the market. And again, with the rise of the VIX, it wouldn't surprise me if we see some big moves up and down. I feel like we're due for a little bit of a correction. September wasn't as bad as seasonality tends to point to. So maybe we get some of that selling off in October. Who knows? But September was actually a really good month. So it wouldn't surprise me if October, going into the election, people take some more profits as they see a little bit more green on their screen. It makes sense to de-risk a little bit, take some profits, and then see what happens after the election. The other thing I wanted to talk about this week, we did get some big news out of China. So China had what they are calling the Beijing bazooka. So they really unloaded a lot of stimulus into their market. Now, I haven't talked a whole lot about China because there hasn't been a lot to talk about in the positive sense. China has been going through their version of 2008 with the property crisis, the Evergrande crisis, and they're really struggling to recover from the pandemic, like other countries like America has. So on top of the pandemic, they also had the Evergrande real estate crisis. They had a lot of banking issues, so their economy has been really sluggish, and on top of that, their demographics is not looking good because of some of the policies like the two-child policy that they had in place for such a long time. They have an aging population, and they don't have immigration or people coming in. They have more people leaving, especially young people are leaving to Singapore and wherever they can go versus staying in China and building businesses there. So this week, China did a lot to help stimulate and boost their economy. So I'll just break down some of the key points there. Tax cuts for small businesses, more infrastructure projects, real estate help. So some of the real estate stuff that they did, they made it easier for people to get second mortgages. They lowered the down payment. They also cut interest rates. So a lot of things there to help people just buy more real estate, because they overbuilt a ton of apartment buildings. There's a lot of apartment buildings, almost even cities, that are just sitting there empty, and no one can move in because there's nobody there's no one to move in. So there's just a bunch of empty buildings, and also just people are hurting, and the banking system is not very strong right now in China. So a lot of real estate help there. Bank lending, they did give a lot of money to the banks. They gave them a cash infusion, so the banks will be a little bit more easier to lend money out to people now that they have more reserves on their books. And then some of the other things that they did is they gave money to their brokerage accounts. They said, hey, here's billions of dollars to an equivalent of a Charles Schwab or a company like that, but for China. And they said, go buy a bunch of stocks, Chinese stocks. And then they also are giving loans to businesses, zero interest loans, saying, hey, build, infrastructure, build a plant, buy back your stock, do what you feel is best for your business to create more revenue down the road, and just grow the pie. So there's just a lot of that money sloshing around, and I do think that is why you're seeing, obviously that's why you're seeing the Chinese market really rip, but you also saw this week things like Nvidia, the chips, software, Tesla, right? All those companies sell products in America and China. So if you were in China, maybe you were buying, you're buying Alibaba, but also I think the market is saying there's going to be more cars sold in China for Tesla, and there'll be more software sold in China for Google or whatever company is working there. Google doesn't operate in China, but you get what I'm saying. And then crypto, if you are a Chinese company or Chinese citizen and you just got a huge influx of cash and you're sitting there saying, what do I want to do with this cash? China has made it much more friendly to own crypto on your balance sheet as a business and an individual. You can't necessarily go buy something with crypto, but again, all this money sloshing around is going to find a home in crypto, and Bitcoin is no different. So I think that is another reason for the price in Bitcoin doing what it did this week. So that is the news with China. Again, we are at the beginning stages. Money has been constricted around the world for the last couple of years since the inflation problem. We are no longer dealing with an inflation problem, just like in the United States and other places. We're now dealing with the potential of a softer economy. So now the restriction is coming off of the money printers, and money is starting to be handed out. The candy is getting handed out. So money is going to start sloshing around all over the place, and it's going to find its way eventually into assets. So that train is never going to slow down. It just goes in cycles. So right now we are in the liquidity globally is on the big upswing. You're seeing gold at all-time high. You're seeing stocks at all-time high. You're seeing crypto near all-time highs. That's because we're starting to see the money printers come back on. Now, the only thing that will stop that in the short term will be a recession and people pulling their money out to deal with the loss of job or the potential of loss of earnings power by these companies. So will we get that? I don't know. We will wait and see. So we're still in the same boat. It feels like a 50-50 market where the next 20% could be up or the next 20% could be down before we resume our uptrend. But I'm still bullish longer term. Nothing's changed for me. At the beginning of next week, I will start to look to do a little hedging because we're very green and we've moved a decent amount in a short period of time. So it makes sense for me to hedge a little bit, do what's best for you. But I'm still invested in the market. I will never get out of the market. So stay invested, stick to your plan long term, but keep an eye on what's going on out there. And just remember that we are at the beginning stage of easy money starting to flow back into the world. So I will leave you with that. Everyone, enjoy your weekend. If you like this video, hit the like button, send it to somebody if you think they will value this as well. But that is all I got for you guys. Have a great weekend. I'll see you next week. Peace out.